Ladies and gentlemen, thank you for standing by and welcome to the VMware's fourth quarter and fiscal year 2021 earnings call. At this time, all participants are in a listen-only mode. Please be advised that today's conference is being recorded. After the speaker's presentation, there will be a question-and-answer session. To ask a question during that time, you will need to press star, then the number 1 on your telephone keypad. If you require any further assistance, please press star 0. I would now like to hand the conference over to your first speaker for today, the Vice President, Investor Relations, Mr. Paul Ziots. Thank you. Please go ahead, sir.
Thank you. Good afternoon, everyone, and welcome to VMware's fourth quarter and fiscal year 2021 earnings conference call. On the call, we have Zane Rowe, CFO and Interim CEO. Following Zane's prepared remarks, we will take questions. Raghu Raghuram, COO, Products and Cloud Services, and Sanjay Poonen, COO, Customer Operations, will join for Q&A. Our press release was issued after close of market and is posted on our website where this call is being simultaneously webcast. Slides which accompany this webcast can be viewed in conjunction with live remarks and downloaded at the conclusion of the webcast from ir.vmware.com. On this call today, we will make forward-looking statements that are subject to risks and uncertainties. Actual results may differ materially as a result of various risk factors described in the 10-Ks, 10-Qs, and 8-Ks VMware files with the SEC. We assume no obligation to and do not currently intend to update any such forward-looking statements. In addition, during today's call, we will discuss certain non-GAAP financial measures. These non-GAAP financial measures, which are used as measures of VMware's performance, should be considered in addition to, not as a substitution for, or in isolation from GAAP measures. Our non-GAAP measures exclude the effect on our GAAP results of stock-based compensation, amortization of acquired intangible assets, employer payroll tax on employee stock transactions, acquisition, disposition, certain litigation matters, and other items, as well as discrete items impacting our GAAP tax rate. You can find additional disclosures regarding these non-GAAP measures, including reconciliations with comparable GAAP measures, in the press release and on our investor relations website. The webcast replay of this call will be available for the next 60 days on our company website under the investor relations link. Our first quarter fiscal 22 quiet period begins at the close of business Thursday, April 15, 2021. With that, I'll turn it over to Zane.
Thank you, Paul, and thank you to everyone for joining us today. We realize you're used to hearing Pat's voice as we start these quarterly conference calls. I want to thank Pat for his leadership, which helped put VMware in a position to execute on our strategy and drive long-term value. Pat is a true partner and a friend, and of course will still be a VMware board member. We're pleased with our Q4 financial performance, as it was a good finish to the fiscal year. Q4 total revenue increased 7% year over year, with non-GAAP EPS up over 8%. We finished fiscal 21 with $11.8 billion in total revenue and non-GAAP EPS of $7.20 a share. This past year was one of unprecedented disruption and uncertainty, and we're proud of what the team accomplished. As we quickly adapted to a distributed workforce, we helped our customers accelerate their work-from-anywhere journey and their application and cloud modernization initiatives. We're seeing customers continue to choose VMware to help them deliver the digital foundation to power their apps, clouds, security, and user experiences. Large global customers continue to align and partner with us, and the nature of our strategic relationships with our largest customers continues to grow. In Q4, we closed deals with significant aerospace and telco customers and saw particular strength in the financial sector, including wins with HSBC and Wells Fargo. We see financial services customers utilizing a combination of franchise solutions ranging from modern apps and cloud infrastructure to networking and our digital workspace offerings. We also continue to see momentum with key communication service providers such as NTT Docomo and Telia increasing their focus on VMware solutions, as well as new and expanded contracts with additional Tier 1 communication service providers globally. In the retail sector, a large customer that standardized on our technologies in their private cloud is leveraging VMware as a platform for their cloud migrations, while also investing in edge cloud infrastructure and using Tanzu for containers in their retail edge locations. We see this as a repeatable use case for other retailers, along with other e-commerce app development use cases retailers are building on top of Tanzu. Our work with life sciences and healthcare customers is enabling their critical apps to run on our hybrid cloud and is helping to secure their user devices for employees working from anywhere. In addition, our partner ecosystem is driving momentum for VMware solutions. We're expanding the reach of our solutions through key strategic partnerships, from our VCPP partners to hyperscalers to system integrators. For example, earlier this month, we announced an expansion of our partnership with Accenture, resulting in the launch of their dedicated VMware business unit. The group will bring together approximately 2,000 professionals across a variety of industries with expertise in hybrid cloud and cloud migrations, cloud native and application modernization, as well as security. We also recently formed a joint innovation lab with Lumen, designed to drive edge computing, security and secure access service edge, or SASE, for customers in a number of industries. Looking at the broader portfolio, we continue to further our multi-cloud strategy and are seeing traction as customers align app requirements to the cloud of their choice, whether it's private, hybrid, or public. This quarter, we expanded our resale program with AWS to include additional VMware technologies and services, such as VMware Cloud Disaster Recovery and vRealize. Additionally, VMware Cloud on Dell EMC, a Dell Technologies cloud service from VMware, expanded to the EMEA market with immediate availability in the UK, Germany, and France. We continue to deliver on innovation with Tanzu. With the announcement of general availability of Tanzu Advanced Edition, we now have 3 Tanzu editions in the market: Basic, Standard, and Advanced. Each edition is targeted at a common customer challenge of modernizing infrastructure and applications. Tanzu Advanced includes all the capabilities that enterprises need to embrace DevSecOps and manage complete container lifecycle. We continue to see strong positive reception to all 3 Tanzu editions. We also added container security to VMware Carbon Black Cloud, leveraging technology from our recent Octarine acquisition to provide visibility into on-prem and public cloud Kubernetes clusters. Our NSX portfolio offers a comprehensive set of L2 to L7 capabilities, implemented completely in software. We recently released the latest version of NSX, which included enhancements across routing, identity firewall, load balancing, and cloud. In FY21, VMware was recognized by top industry analyst firms as a leader in 13 key reports across cloud management, networking, hyper-converged infrastructure, and end-user computing. In November, Forrester named VMware a leader in the Forrester Wave Hybrid Cloud Management Q4 2020. More recently, we were named a leader in December's 2020 Gartner Magic Quadrant for hyper-converged infrastructure software. And in January, VMware was positioned as a leader in 3 IDC MarketScape reports related to the end-user computing space, including the Worldwide Unified Endpoint Management Software 2021 Vendor Assessment. From a broader corporate perspective, I'm personally pleased to highlight that we recently unveiled our 2030 agenda, which encapsulates how we will drive ESG goals into every aspect of our business. Our 2030 agenda is integrated into the business and is focused on 3 business outcomes: trust, equity, and sustainability. Recently, we also performed well in the areas of sustainability, earning the distinction of being included in the 2020 Dow Jones Sustainability Index among the world's leading ESG benchmarks. Now let's move to more detail on our business performance as well as our forecast. In Q4, the combination of subscription, SaaS, and license revenue grew 8% year over year to $1,721 million. We saw large enterprise demand strength throughout the quarter, which allowed us to close a record 35 deals over $10 million. This was balanced with good performance in our commercial business as well. Subscription and SaaS revenue increased 27% year over year for the quarter, with strong growth in our VMware Cloud Provider program, end-user computing, Carbon Black, and VMware Cloud on AWS offerings. We continue to invest and expect to see further growth in this important area for us in FY22 and beyond. Our focus is on scaling existing offerings as well as adding new solutions. VMC on AWS once again had a great quarter with both workloads and revenue nearly doubling year over year as we continue to expand functionality and use case adoption. As of the end of Q4, ARR for subscription and SaaS was $2.9 billion, an increase of 27% year-over-year. License revenue for the quarter declined 2% year-over-year to $1,014 million. Now, this was better than expected as we had a strong deal closure rate throughout the quarter. Non-GAAP operating income increased 8% year-over-year in Q4 to $1,133 million, primarily driven by better than expected revenue growth. Non-GAAP operating margin for the quarter was 34.4%, with non-GAAP earnings per share of $2.21 on a share count of 423 million diluted shares. We ended the quarter with $10.3 billion in unearned revenue and $4.7 billion in cash equivalents, and short-term investments. Cash flow from operations for fiscal 21 was $4.4 billion, which was well ahead of our expectations. Q4 cash flow from operations was $1,324 million, and free cash flow was $1,242 million. Now, this strength was primarily due to our emphasis on closing certain deals prior to calendar year end, which resulted in receiving the associated cash in FY21 rather than FY22. In addition, we benefited from early collections and advanced payments from partners and customers, as well as certain other expenditures which were lower than expected in FY21. With subscription and SaaS becoming a larger share of total revenue, we're now providing our end-of-period total and current RPO. For Q4, RPO was $11.3 billion, up 10% on a year-over-year basis, and current RPO was $6.2 billion, up 12% year-over-year. Total backlog was $93 million, substantially all of which consisted of orders received on the last day of the quarter that were not shipped that day, and orders held due to our export control process. License backlog at quarter end was $23 million. Overall, our product portfolio performed well in Q4, with customers continuing to purchase solutions that contain multiple products. Core SDDC product bookings increased 12% year-over-year in Q4, highlighted by strength in our vRealize management offerings, which are now available both on a perpetual and SaaS basis. Compute product bookings also performed well, growing in the low single digits year-over-year. NSX and vSAN had single-digit year-over-year declines, which was an improvement for both versus Q3 of FY21. These two technologies continue to be further integrated into our broader solutions. 3/4 of our EUC product bookings are now SaaS. EUC's ACV SaaS growth rate was 30% year-over-year in Q4, driven primarily by Horizon and our initiatives related to Anywhere Workspace. Given our focus on SaaS ACV, EUC product bookings decreased in the high single digits year-over-year. Carbon Black Cloud once again grew in the high double digits year-over-year, and we continue to make progress in expanding our endpoint and workload protection capabilities and delivering intrinsic security value to our customers. Our Tanzu portfolio exceeded expectations and had a strong attach rate in 8 of the top 10 VMware deals in Q4. In Q4, we repurchased 2.7 million shares in the open market at an average price of $140 per share. At the end of Q4, we've utilized over $1.4 billion from our current repurchase authorization of $2.5 billion. Turning to guidance for fiscal 22, we expect total revenue of approximately $12.7 billion, or a growth rate of 8%, which is consistent with the early outlook provided on our last call. We expect to generate approximately $6.3 billion from the combination of subscription and SaaS and license revenue, or an increase of 12%, with approximately 55% of this amount from subscription and SaaS. We expect non-GAAP operating margin of 28%, with non-GAAP earnings per share of $6.68 on a diluted share count of 422 million shares. As I mentioned earlier, we had very strong cash flow from operations in Q4 due to a number of initiatives that resulted in exceeding our cash flow guidance by over $650 million. While we're extremely pleased with this result, the bulk of this overachievement was accelerated from our upcoming fiscal year. Taking that into account for FY22, we currently expect cash flow from operations of $3.8 billion and free cash flow of $3.42 billion. On a normalized basis, taking into account the acceleration of cash into FY21, cash flow from operations would be roughly flat on a year-over-year basis for FY22, in line with our operating performance. For Q1, we expect total revenue of approximately $2,910 million, or a growth rate of 6%. We expect approximately $1,320 million from combined subscription and SaaS and license revenue in Q1, an increase of 7% year-over-year, with over 55% of this amount from subscription and SaaS. Our expected growth rate for Q1 license revenue is impacted by continued growth in subscription and SaaS and the strength we saw in Q1 last year. We expect non-GAAP operating margin of 27.5% for Q1, with non-GAAP earnings per share of $1.49 on a diluted share count of 422 million shares. In closing, we're pleased with our Q4 performance, the improvements we're seeing in the macro environment, and our expanding opportunities to engage with our customers and partners. We're committed to executing at scale as we continue to build our subscription and SaaS business and invest in our future growth while delivering technologies and solutions today that help our customers and partners with their digital transformations. Before we go to questions, I'm pleased to tell you that we are making progress on the potential spinoff of VMware from Dell. While our special committee of independent directors continues to evaluate the spinoff, we believe that it could be value enhancing to VMware and its stockholders. We will not be commenting further on these discussions until there's more definitive news to share. With that, I'll turn it back to Paul for Q&A.
Thanks, Zane. Before we begin the Q&A, I'll ask you to limit yourselves to one question consisting of one part so we can get to as many people as possible. Raghu and Sanjay are joining us now for Q&A. Operator, let's get started.
Thank you, Paul. As a reminder, to ask a question, you will need to press star, then the number 1 on your telephone keypad. Again, that's star, then the number 1 on your telephone keypad. To withdraw your question, please press the pound key. Please stand by while we compile the Q&A roster. Our first question will come from the line of Raimo Lenschow. The line is now open.
Hey, thanks for taking my question, and congrats on a great finish to the year. And I do miss Pat as well. My question was on vSAN and NSX. Those are obviously growth areas for you in the past and now suffering from the pandemic, but it looks like it's getting a little bit better. Can you just talk a little bit what you're seeing there in terms of how this gets impacted and how this acts when we're coming out of the pandemic? Thank you.
Sure, Raimo. Yeah, happy to talk about that and maybe ask Raghu to add in a few comments afterwards. As anticipated, we did see continued COVID impact, most particularly on the transformational deals in Q4. Even as you point out, we had a great quarter, and the performance suggests that there is some recovery in this area. I will point out we had, as I mentioned on the prepared remarks, 35 deals with 10 million and over versus 28 a year ago. And within those deals last year, we were fortunate to have what we'd call sort of our Uber deals, which are extra large deals that clearly had an impact on both NSX and vSAN. We also had some tough compares. So NSX was up 21% last year, year-over-year, and vSAN was up 15%. So when you think about those transactions, if you exclude the really large transactions, NSX was actually up incrementally on a year-over-year basis. So overall, we're pleased with both where we are in the incremental basis as well as year-over-year for both those products. And then, Raghu, maybe an opportunity for you to talk a little bit more about NSX in particular.
Absolutely. Raimo, as you know, we greatly expanded our NSX portfolio to offer the complete set of Layer 2 to Layer 7 services and software. Notable amongst them were our AVI load balancing capability, our advanced threat protection suite that we introduced for IDS, IPS, and East-West security in general, and of course our VMware Cloud. All of those businesses did really well, and we are pleased with the growth of those businesses. And so that's one aspect of the NSX growth. The other aspect of the NSX growth is NSX is also becoming the underlying network for modern applications and container workloads, and those use cases did really well for NSX. And then last but not the least, we are increasingly NSX is part of our cloud solutions, and we had some benefit there as well.
Okay, perfect. Very clear. Thank you.
Thank you, Raimo. Next question, please.
Our next question will come from the line of Phil Winslow. The line is now open.
Hey, thanks guys for taking my question, and congrats too on a strong close of the fiscal year. Just wanted to focus in on Tanzu in particular. Zane, you mentioned 8 of the top 10 deals attached Tanzu. Question: could you just talk about the momentum that you're seeing in Tanzu, coming into this coming fiscal year? Obviously, you talked about some transformative deals having been pushed out over the prior quarters. Do you think we're starting to see these transformative deals come back? Because obviously Tanzu would probably fit into that bucket.
Yeah, we are, Phil. It's a great question, and thanks for mentioning it. As you point out, we're very pleased with our Q4 Tanzu performance. We see good momentum there, and the team exceeded our expectations across a number of fronts. As you point out, we had 8 of our top deals, 8 of our top 10 deals in the quarter include Tanzu, and we saw strength in verticals in telco, FinServe, life sciences, healthcare, that are all embracing the Tanzu platform. So we're very pleased with it. We think we've got good momentum. We're actually, we just GA'd Tanzu Advanced, and maybe Raghu, if you want to dig into that a little bit more, I think that'd be helpful here too.
Sure. So our efforts in Tanzu are along 2 axes. One is to win new customers, especially in the Kubernetes ecosystem, and second, renew and expand the customers that were part of the Pivotal family. So in the new customer acquisition arena, we've been steadily introducing new product innovations in the Kubernetes ecosystem. We started with Tanzu Basic, which embedded Kubernetes into vSphere. And then we introduced Tanzu Standard, which provides for multi-cloud management of Kubernetes clusters, and usually goes along with the VMware Cloud Foundation. And then, as Zane just said, last quarter we introduced Tanzu Advanced. And Tanzu Advanced has 3 value propositions. The first one is it provides for management of the complete container lifecycle. Second is it allows enterprises to embrace the DevSecOps model of software development. And then the third is it accelerates code to production, which is especially critical when customers are building their digital applications. And Tanzu Advanced is a pretty unique offering in the marketplace. Gartner classifies about 12 capabilities that are needed for a modern DevSecOps framework and a container ecosystem. Tanzu Advanced has 11 of those, with the 12th one coming in the first half of this year. So the first thing to note about Tanzu Advanced is it's a very comprehensive offering across both the infrastructure and the application development layers. And it plays to the areas that we have traditionally been very strong in, things like networking and resource management and so on and so forth. The second thing to note about Tanzu Advanced is it is modular, so customers can pick and choose the elements that they want. It's not like they have to swallow all of it at one shot, and so they can choose best of breed. And the third, of course, is it's very well integrated with vSphere, especially for customers that are starting from a vSphere base. And it is multi-cloud. So it's a very comprehensive offering in that regard, and that's why customers are excited about that. And we hope to do a lot of business with it.
Thank you, Phil. Next question, please.
Our next question will come from the line of Matt Hedberg. The line is now open.
Hey, great. Thanks for taking my question, guys. Yeah, I had a question about the SolarWinds breach and perhaps the impact on your security business. I know I think it's kind of at or near a run rate of $1 billion. Just kind of curious on if Carbon Black saw any benefit, or just sort of the broader thoughts on security transformations in sort of a post-Sunburst world. Thank you.
Thank you, Matt. This is Sanjay Poonen. Yeah, I think it's a wake-up call for security overall, and certainly it's become a boardroom topic as we talk to chief security officers. As you know, we now have a much more comprehensive zero-trust security platform, and we found certainly it allowed us to have a more discussion. We have these sort of rules of cyber hygiene where we could tell them about everything they need to do, from multi-factor authentication and identity management workspace ONE to micro-segmentation with NSX to all of the endpoint and workload security to Carbon Black. So that comprehensive story that is zero trust really allowed us to now have much more strategic conversations as the role of the chief security officer became more important in the last 30, 60 days without, of course, being ambulance chasing. And behind that, we were able to then sell elements of it. You heard from Zane's prepared comments about Carbon Black Cloud, had high double-digit growth and is now over 25,000 customers. We're excited about that. The good innovation that Raghu talked about with NSX, a lot of that is security capabilities. And then, of course, Workspace ONE continues to deliver in a work-from-anywhere environment where security is paramount.
Thank you, Matt. Next question, please.
Our next question will come from the line of Kash Rangan. The line is now open. Kash Rangan, the line is now open.
Okay, I think we'll go on to the next question.
The next question will come from the line of Walter Pritchard. The line is now open.
Hi, thanks. Zane and Sanjay, I guess I'm wondering, as it relates to your articulation around the subscription transition, you've gone through sales kickoff and you're getting into a new year here. I'm curious sort of what you're charging the sales force with around pushing vSphere on a subscription basis. And I know, Zane, you mentioned you'd had that at least to some degree in the numbers as you guided for the year initially, and you didn't change that. But just an update there would be helpful, I think, for folks. Thanks.
Yeah, sure, Walter. We're just pleased you're not asking a security question. No, we continue to focus on our sub and SaaS growth. As you know, we're a week away from our sales kickoff. We're very comfortable with the transition that we're making and the growth that we're seeing in our sub and SaaS portfolio. I highlighted we grew 27% year over year in the fourth quarter, comprised 22% of our total revenue. So we're excited about the opportunity. We're excited about what FY22 will bring. We've guided to 31% if you look at the guide for FY22. Which will be a nice increase. We think the portfolio within that is growing nicely, and the sales teams are candidly doing a great job as we work with our customers to meet their needs and to grow the portfolio. Sanjay, I don't know if you want to talk a little bit more about the comp structure there.
Yeah, very briefly, next week is our sales kickoff, and what we're emphasizing to them is obviously to go where the customer is going. So as you think about the move towards cloud, it's private cloud, public cloud, and edge cloud, and we're going to go where the customer is. If there's appropriate deployments on premise, we'll orient to that, and especially in the edge, we saw with some of those use cases. But certainly there's a orientation towards cloud, and that will accelerate subscription and SaaS. We've also seen good success with some of the places where we have some of these flexible offerings already. We realize SaaS has some of those capabilities now, Horizon, and that is giving the reps early taste of how we can orient our discussion towards some of those SaaS offerings and bring those flexible universal type offerings. So you'll hear more about that from us in the coming months.
Thank you, Walter.
Great, thanks.
And good luck in your next endeavor.
Thanks.
Next question, please.
The next question will come from the line of Shannon Cross. The line is now open. Shannon Cross, the line is now open.
Okay, we'll go to the next question then.
Next question will come from the line of Mark Murphy. The line is now open.
Hi, good afternoon. This is Matt Koss on behalf of Mark Murphy. I'll add my congratulations for this quarter. I'm wondering if you could let us know, over the past year, where have you specifically seen areas of underinvestment in private clouds, and where might we see some of this investment come back or snap back in this fiscal year?
Yeah, so this is Raghu. From your question, it was not clear whether you're talking about VMware's investment or the customer's investment. I'll try to touch upon both. VMware, we are super excited by, obviously, the full private cloud stack, and that's indeed one of the ways we distinguish ourselves in the marketplace. And over the last year, as you saw in the prepared remarks, our investments in management, our investments in network security, and our overall private cloud investments have paid off really well. From a customer point of view, as Sanjay just mentioned, customers think about their cloud spending in certainly in the data center, but also increasingly the edge. But if you step back and look at it, the way customers look at it is they very often adopt what we call a 2+1 or a 2+2 strategy. What I mean by that is they look at their applications and deploy them across 2 public clouds, a private cloud, and an edge cloud. And then the question becomes, how do you modernize your applications on the cloud of your choice? How do you migrate the applications to the cloud of your choice? And how do you manage all of these things together? And that's where our portfolio is focused on. So with VMware Cloud, for example, we can help customers. Historically, we have helped customers migrate to the cloud faster than any other mechanism, 47% faster and 57% cheaper. With our Tanzu portfolio, we can help our customers modernize their application portfolio. And in the enterprise, the majority of applications are Java and Spring, and we provide the fastest paths to modernization across the private cloud and the public cloud. And as I said earlier, you can pull it all together and manage it all together as one overall application and infrastructure estate. And last but not the least, our investments in security. We are focusing on investing in protecting the workload, whether it's a workload on a vSphere-based platform with Carbon Black workload, a workload on a container with our Octarine technology, and in the future, a workload running natively on AWS. So the answer to your question is customers look at this as a continuum between private cloud, public clouds, and edge, and they would like to be able to build, run, manage, connect, and protect their applications across all clouds, and then, of course, deliver it to all devices. So that's really how customers are looking at it, and that's where our roadmap is pointed at.
Hey, Matt, I would just add, as you look at our guide for FY22, and if you were to think about sort of the on-prem piece and where we are with our license guide, if you were to take a look at 2 elements that we're moving towards SaaS, and you think about the return on investment on that on-prem business, if you looked at just what we're doing with vRealize that Raghu mentioned, as well as EUC, and you converted that back into sort of an on-prem basis, you would actually see positive growth for our on-prem license business into FY22. So while we've guided slightly negative, it's not a reflection of our investment going into that business. All the returns we're getting in that business, actually, with our push towards sub and SaaS, it probably masks some of the growth that we see within that business. So we continue to invest in it and see a great opportunity ahead for that as well.
Thank you, Matt.
Thanks, Matt.
Next question, please.
The next question will come from the line of Mark Moerdler. The line is now open.
Victoria Cardenas on for Mark Moerdler. Thank you guys for taking my question. Could you provide any color on what you're hearing from IT organizations about demand for core server virtualization given the current demand environment?
Sure, yeah, I'll start and then let Raghu add on the server side. Obviously what we saw in Q4 was highlighted by what we saw with our core SDDC product strength, which, as I mentioned, was up 12% year over year. We saw strength in our vRealize management offerings, as well as the compute products that performed really well. On a year-over-year basis, compute was actually up slightly positive, which was, I think, a surprise to many. Our multi-cloud offerings, such as VCPP, cloud management, VMC on AWS, contribute to this core SDDC growth, which I think is at least somewhat synonymous with as you're thinking about where you are with servers and the question you had on compute. Raghu, maybe if you want to touch on a little bit more on the demand that you think.
So server virtualization typically has been a function of the workloads that are being introduced into these environments. Clearly, historically, we have done really well in traditional enterprise applications. Over the last couple of years, customers are increasingly adopting what we would call cloud-native architecture applications built using microservices and containers and so on, running on top of vSphere. And as Sanjay pointed out, we are seeing virtualization at the edge. And in previous calls, we've also pointed out how the core telco network is getting virtualized. They are going on a journey just like IT did, from physical to virtual, and then from virtual to cloud, extending all the way into the radio access network. So the breadth of the workloads that the virtualization can handle is continuously evolving and expanding, and that's what's fundamentally driving server virtualization business.
Thank you, Victoria. Next question, please.
Our next question will come from the line of Shannon Cross. The line is now open.
Thank you very much, and I apologize. I was juggling a different call and missed it. So anyway, apologize for that. Can you talk a bit about what's going on with the 5G telco cloud, and just in general what you're thinking about 5G and the opportunity for VMware? You know, we've definitely started to hear from others who are working around, working with the providers, that they're starting to see a ramp. So I'm just curious how we should expect that to roll through your numbers. Thank you.
Yeah, I'll take that question, Shannon. So this past quarter, we saw continued momentum with Tier 1 global service providers, and 5G, and the 5G architecture was one of the big considerations in them selecting VMware. And as I said a few minutes ago, our customers, the telco customers, are on a journey to go from, in their core network, from physical to virtual, and now virtual to cloud. And our offerings have matched the customer needs there, and we have introduced the telco cloud platform with an automation layer and an operations layer. The next step beyond core network virtualization is the radio access network. And in the radio access network, it's fundamentally a couple of disruptive trends that are happening. One is the radio access network being delivered as disaggregated components, delivered increasingly in software, running on virtual machines, or containers running in a virtualized framework. And then this is the first step, and then the next step is, of course, open standards here. In fact, if there is any industry segment where open source and open standards matters a lot, it's obviously in the 5G arena. So that's where VMware is. That's where customers that are selecting VMware are most interested in our roadmap, and we are fast becoming the operating system for 5G providers, and we have had a number of wins in this area.
Thank you, Shannon. Next question, please.
The next question will come from the line of Keith Weiss. The line is now open.
Thank you for taking the question. This is Sanjay in Keith. My question is really around the composition of growth. And the last time that VMware was going through sort of a market transition, we really had NSX, EUC, vSAN, and VCPP really, power and anchor a pretty impressive acceleration from 2016 to 2018, 2019. And as we come out of COVID, I wanted to get the team's view on what the anchor products are going to be, including NSX, like who's going to sort of lead the charge, and are those products of material scale today to drive that dollar growth in terms of driving that overall growth? So if you could sort of paint the picture of how you expect things to trend over the next 2 years from a product portfolio perspective.
Sure, yeah, I'm happy to start and then have Raghu maybe dig into some of the opportunities within those products. I mean, obviously we feel very good around our sub and SaaS portfolio, and Raghu went through sort of all the components of that that we believe will drive growth for many years to come, and are quite pleased with the 31% growth that we're expecting in FY22, and obviously sizable growth beyond that. We are focused on app and cloud modernization, and you've heard us talk about Tanzu, and we believe that and how that integrates with our cloud portfolio is going to drive significant upside for us and significant growth for us. We also talk more about stacks, so you're going to hear us talk more about whether it's VMC on AWS or just the VMware Cloud, and that's probably the area that I would identify as the integrated nature of this in our 5 franchises that we've been talking about over the last number of quarters now. all as being key drivers to growth, as well as the work we've been doing with intrinsic security to form a wrapper around all that. So we're pleased with the portfolio now more than ever before and how it's integrated and how it's working together. But I'll have Raghu maybe give a couple of highlights as he sees the product set as well.
Absolutely. So I would talk about our portfolio in two halves, if you will. One is addressing a customer's drive towards application modernization. A big part of application modernization, of course, one is modernizing the application estate. The other is moving to a cloud. And our VMware Cloud offerings, which are now present across all the hyperscalers and other cloud providers, as well as on-premise, and the Tanzu offerings, both of them are maturing, and we are bringing them together along with our management portfolio into something that we are calling as VMware Cloud. And this combination of Tanzu plus the core VMware Cloud Foundation delivered as a service plus management addresses a secular need from the customer base in terms of their application modernization and migration journey, and to be able to manage all of that together. So that's one. That's going to be one driver of our growth. The other, looking at the other side of the puzzle, is our customers increasingly coming to the conclusion that most of their employees, even post-COVID, a significant portion, are going to continue working from home. And if you look at the work from home environments for most enterprises today, it's fairly ad hoc. It has not been architected, taking into consideration the needs for security, performance, end user experience, IT manageability, et cetera, et cetera. So what we have done is we have bought all the components necessary for a great work from anywhere experience for both IT and end users by bringing together Carbon Black, our end user computing portfolio, and our SD-WAN Velo portfolio, along with the VMware SASE announcements, put them together as a solution, and we think that is going to drive significant customer interest and growth as well. So these would be the two pillars that our sales force will be taking to market in a big way this year.
Thank you, Sanjit. Next question, please.
The next question will come from the line of Brent Hill. The line is now open.
Thanks, guys. This is Parthivan for Brent. Zain or Sanjay, can you speak to the assumptions that you're embedding into the 8% revenue growth guide for fiscal 22 relative to last year? Just, in terms of sales cycles, close rates, expansion rates on the SaaS side, any color there would be helpful.
Sure. Yeah, I'm happy to start, and then I'll hand it over to Sanjay. As I pointed out earlier, we're expecting 31% growth in our sub and SaaS portfolio. We're fortunate to have great renewal rates which continue. We also have, I'd say, good duration with our EAs, and obviously saw significant EA growth above $10 million spend in the fourth quarter. So we would expect those natural trends to continue through FY22. We've got a number of products within that sub and SaaS portfolio that have been performing really well. VCPP had one of its best quarters ever in the fourth quarter, and we see that trend continuing. We're also very pleased with the work that's going on with VMC on AWS, both on our side and with AWS as a reseller there. So we're very encouraged by the opportunity set we see there, and candidly, with much of our sub and SaaS portfolio, we think there's a great opportunity ahead. So, Sanjay, I don't know if you want to dig in a little bit more and to talk a little bit from the customer lens, what you're seeing.
Yeah, I think as we kind of translate, and hopefully there's a gradual recovery in the economy, I think those two portfolio elements that Raghu built on is kind of what we're reinforcing to our sales force. If you think about the app modernization and cloud migration, that should drive subscription and SaaS led by Tanzu. Almost think of Tanzu like a magnet that pulls the full cloud foundation, software-defined data center underneath it, and that could then be deployed in private cloud, public cloud, or edge cloud. We feel that that should drive subscription and SaaS, but we can certainly hold our own whenever a customer is looking to spend on-premise in a private cloud. And the second is a workspace and security dialogue, and that should also be driven very much by subscription and SaaS, because Workspace ONE, Carbon Black, the secure access service edges are very subscription and SaaS. So that's the organizing element that led to that 31% subscription SaaS growth that Zane talked about. But we certainly don't want the field to feel like it's a student body right, and customers aren't investing in areas like edge or private clouds where there will be appropriate spending on-premise.
Thank you, Parthiv. Next question, please.
The next question will come from the line of Kirk Materne. The line is now open.
Hi, this is Sharad Ved calling on behalf of Kirk, and thanks for taking the question. I wanted to ask about VMware Cloud. So there's clearly great traction given the prepared remarks on doubling revenue and workloads year over year on VMware Cloud and AWS, the strong established partnerships with all the hyperscale cloud vendors. When you think about your growth here, are VMware Cloud customers actively expanding their presence on the platform, or is the ARR growth more of a function of bringing on net new customers? And are you able to give any color on what portion you see as longer-term customers or partners versus how many of them you believe would potentially look to lift and shift or refactor workloads for the public cloud in the long run? Thank you.
Yeah, let me start. The answer to the first part of your question is the workloads growth on the VMware Cloud and AWS platform is coming from both the axes that you talked about. One is existing customers expanding, and in fact expanding at a considerable rate once they get used to the platform. And then we are also acquiring new customers. Our partnership with AWS, both on the product side and on the go-to-market side, is helping us greatly in this, and the resale relationship is working very well. In terms of the workloads themselves, we see both categories where workloads are being brought as is, as well as workloads that are being brought in for modernization. One of the great benefits and unique benefits of the VMware Cloud architecture is you can bring a workload in and you can refactor and run it on top of the Tanzu stack or even the OpenShift stack on top of VMware Cloud and have it connect to all the native cloud services. For example, if this was VMware Cloud on AWS, a workload running on VMware Cloud on AWS could use Aurora or Redshift or any of the other AWS services. So this provides a great environment where customers can take their entire enterprise portfolio and bring it onto one platform. And none of this transformation happens overnight. So for a significant period of time, they will always have a lot of workloads on-premise, a lot of workloads in the cloud, and now we can tie it all together with a common management and security layer. That really is the value proposition. And by the way, I used VMware Cloud on AWS as an example, and that's our preferred partnership and a preferred platform. Of course, we can do the same thing with the other hyperscalers as well. And with the other hyperscalers, that business is in its infancy, but we are seeing very robust pipelines and a lot of excitement and a great working relationship there as well.
Thank you, Sharad. Next question, please.
The next question will come from the line of Keith Bachman. The line is now open.
Hi, thank you very much, and congratulations on a very strong set of results. I wanted to go back to Tanzu if I could, and Raghu, thank you for that description on the three levels. And my question is, A, is Tanzu in your mind a part of pulling the portfolio, or is it a revenue generator? And B, is there any metrics that you anticipate giving this year on Tanzu adoption, and what might those metrics include? Many thanks.
Yeah, I'll answer the first part, and then Zane can talk about the second part of the story. So Tanzu for us is all of the above, is the short answer. We absolutely see it as a independently a significant and massive market, which is the market for customers doing their digital transformation and building new applications or refactoring and modernizing their existing applications. And we are very unique in that market in terms of both the breadth of our portfolio as well as the fact that we are multi-cloud, and of course, we run really well on top of vSphere. So that's the first part of the answer to your question. And of course, customers never run infrastructure for its own sake, right? They always want infrastructure in order to run applications, and the more our platform does better at supporting Tanzu, the more differentiated our infrastructure platforms will be. So it definitely will pull in our infrastructure story as well. And then last but not the least, Kubernetes is an industry phenomenon. It's turning out to be the cross-cloud portability layer in many respects. And so we are investing very heavily as part of the Tanzu portfolio in providing the world's best Kubernetes management and control, regardless of which Kubernetes platform you may be running on. And so it's a strategic benefit to us, it's a revenue generator, and it pulls in the rest of our platform.
Hey, Keith, it's Zane. So just to add to that, I thought Raghu actually took the easier side of that question. we will continue to give you more information as we find it beneficial. I mean, as Raghu said, it's both of the above. It's very strategic, and we believe is a great revenue and bookings producer for us as well. So it's part of our strategy, and with that, you'll hear us talk more about customer counts and other sort of relevant statistics as the product grows and as we grow in adoption and as we continue to make exciting announcements within that product portfolio. So more to come on that front, Keith.
Thank you,
Okay.
Keith.
Thank you.
Next question, please.
Next question will come from the line of Ben Bollin. The line is now open.
Good evening, everyone. Thank you for taking the question. Could you talk a little bit about the relationship with Lumen, and in particular, how you view your strategy with SASE as differentiated versus the rest of the market?
Yeah, I'm happy to talk. Lumen is the former CenturyLink, and we were excited to announce a strategic relationship with them, and it really covered 3 areas. Number one is edge computing, because we see as compute, storage, networking moves to the edge, these sort of service provider, telcos/service providers are very interested in working with us, and it builds on the 5G comments that Raghu and Zane talked about. The second is work from anywhere, and they see a tremendous proposition of our VMware portfolio around Workspace ONE, inclusive of Horizon, tying into Secure Service Edge. We made some very strategic announcements in VMworld around that, so that's going to be a very key part to their portfolio. And the third was security, particularly Carbon Black for protecting endpoints and workloads. We're going to form with them a joint innovation lab where we will take these solutions jointly to market, and it's a very, very exciting type of partnership. And we're seeing these type of partnership emerge with other service providers and many telcos as they have a B2B arm that wants to then service our enterprise customers, given these big moves of in the industry of 5G and security.
Thank you, Ben. I think we have time for one more question, so let's take the last question.
All right, our last question will come from the line of Robert Mahak. The line is now open.
Great, thanks. A theme I keep hearing about is infrastructure automation, which ties in well with your recent SaltStack acquisition. Can you just expand on how VMware benefits from IT automation and where you stand in integrating the SaltStack acquisition?
Yeah, we are very excited by the Salt interest in Salt amongst our customer base. And overall, if you think about our management portfolio, there is an operations piece called vRealize Operations and an automation piece called vRealize Automation. And the role of vRealize Automation and products like that in the industry is to automate the setup of infrastructure to meet the needs of applications and application developers. So if you think about one of the reasons why cloud is so attractive to application developers and application development teams is you can instantaneously set up the right infrastructure for the application and either expand it elastically or shrink it, et cetera, et cetera. The magic behind all that is what is called automation software. And this has been an area ripe with industry innovation for a number of years now. SaltStack happens to be one of the most popular open source automation frameworks. It's been around for multiple years, and it has a very, very broad adoption both for automating pieces of infrastructure as well as automating the setup and configuration of applications. We are in the process of integrating SaltStack with the rest of our vRealize automation to deliver an integrated automation environment that helps our IT teams, our customers' IT teams, and DevOps teams, regardless of where they are. Clearly, it's going to work phenomenally well in a VMware environment, but like I said, SaltStack and vRealize automation are multi-cloud in nature, so you can use it to automate your EC2 environments or your Azure, you name it, right? So that's really where SaltStack plays in our portfolio. And in an era of COVID, as I said earlier, nobody can walk into the data center, nobody can sort of fiddle around with knobs. You really want automation at its highest levels, and that's what's driving the interest in that category.
Thank you, Robert. Before we conclude, I think Zane has a few final comments.
Sure, Paul. Yeah, and thanks to all of you for your questions. In summary, I'd say Q4 was a good finish to the fiscal year. These results demonstrate our ability to execute a multi-cloud strategy at scale. We're committed to investing in our future growth and building our subscription and SaaS business while we deliver technologies and solutions today that help our customers and partners with their digital transformations. So thank you again to our customers, our partners, and the VMware team for helping us close a successful fiscal 21. We look forward to providing continued updates on our progress in FY22. Thank you, everyone.
Ladies and gentlemen, this concludes today's conference call. Thank you for participating. You may now disconnect.